Okay, welcome back. Good evening, guys. So I think as we slowly ease towards reopening and vaccines and all that kind of stuff, right? Of course, naturally, the attention will be turning to recovery stocks that have been beaten down pretty badly during the pandemic, but as we slowly get vaccinated, get protected by COVID-19, the virus, and of course, from an investing point of view, people will want to actually look at what are the so-called potential rebounds and the potential reversal from historical bottoms of companies that got really hit hard by the pandemic, right? So of course, construction theme is one of them. We see a little bit of rebound from the bottom, especially for a lot of construction or property company. Of course, there are also other sectors as well, but I think it's quite interesting to actually take a look at a construction company or property company, because I think ever since Not So Late Night Show started, we started off with tech stocks, right? And we have never really ever covered a construction or property company. So yeah, today or tonight might be the night to actually look into a construction company, and of course, just not just looking at a company itself, but also the entire industry, whether what is it that you need to look out for, what are the so-called prospects, and what are the so-called pitfalls that you have to be sure of before you actually pick a construction company or property development company in your portfolio, right? So, but before that, maybe Chubing's opinion, would you foresee yourself ever choosing property company or construction company into a component of your portfolio? Rain, you there?
Yep.
So yeah, will you ever foresee yourself doing or buying construction property company?
I mean, it's not a bad thing to look into recovery stock. Although you will think that maybe the best time to buy is maybe a few months back, but recovery will take a very long time to reflect. Of course, share market will be the first one to react, but it takes time, so people also being quite skeptical, and of course this will also slow down the price being reflected in the share price.
Yep, I totally agree with you. Personally, I think we have one comment from Wallace saying that no, he will not actually consider adding or having a construction property development company. I think I share a bit of sentiment as Wallace. I don't think myself or seeing myself having any property or construction company. REITs maybe yes, right? But pure property development and construction, no, right? Maybe later if there's time, I will share with you guys. But let me double check my portfolio to see that if I am buying or not. But I don't think I really have any construction or property development company inside my portfolio, cause you see and you later we also take a look at some of the numbers. Sometimes if you just look purely on the valuation, right, you say that hey, very cheap ma, it's always lower than it's always trading at price to book level of less than 1 time, right? So meaning to say that whatever the company is holding in terms of total assets, right? If we talk about having a company share price trading at below price to book value, it means that you're actually paying $1 worth of cash to buy something that's worth maybe $1.20, right? So you're paying RM1 to buy something worth $1.20 or RM1.20. So that makes sense from mathematical point of view, but you'll always see this kind of trend where properties and construction companies tend to trade at valuation of less than 1 in PB price to book ratio, right? And that is the reason to that also. Later we'll talk more in detail, but usually it's just because the entire business model and the nature of it that really I would really stay away, or I wouldn't see it as a component inside my portfolio. So double check my portfolio. Yeah, I don't think there is any. So safe to say that I'm not a fan of construction and property development, but that doesn't mean that you should follow me. What if this cup of tea is really your cup of tea? By all means, do your due diligence and then study further. And of course, there are also, there are chances of it going up as a recovery stock. And if you're someone who, look for deep value stocks, this could be an opportunity for you, right? So I think we will slowly ease into the topic, should we?
Yep.
All right. So as always, now our premium club is open. The subscription is 48 per year, and of course, these are the so-called items that we are covering. So you get in an invitation to a FB group where we will do interesting discussions. We have interesting reading materials, articles by KayaPlus, and also some very good articles from other websites as well. We also do a monthly private sharing session where we'll share later more on that. Of course, one of the key events that we have every starting of the year is we pick 10 stocks that we are confident of for the entire year. And Stock Plus 2021 was actually held in January. So 2022 will be a component of KayaPlus Premium Club. Of course, there will be premium articles. There also will be Dividend Gems report. So if you are someone who actually enroll in Dividend Gems, actually we give you a checklist to actually screen out good dividend companies. And if you don't have time, you let us know what company you want. We actually help you to do the study, and you just get the report without compromising your time and effort, right? And of course, we will also be rolling out thematic events, thematic transcripts. So this is just browsing through KayaPlus Premium Club, right? So last week we talked about stockholders basics and FAQ. So this is basically to walk you through as a retail investor or retail stockholder, chances are you are not going to have a major say. So what are the things that you need to ask and need to check when you gauge the management of company, right? So we covered some of the key points inside this video, which was a premium club monthly sharing. And of course, yeah, Walt Disney is one of the US stock that we actually made into a premium article. And coming end of this month, we will talk about the electric vehicle ecosystem. So of course, the breakdown will be the concepts, the overviews are who are the manufacturers, the supporting components, the companies who are actually the so-called, say for example, the lithium battery or lithium component makers, who are the manufacturers out there, and who are the supporting companies, say for example, the LEDs, the chip makers, etc., right? And also what are the good policies that are actually going to help push this entire segment to be an interesting scene in the future. So of course, if you're just interested in this event, per entry or per ticket is going to be $199. But if you are already an existing KayaPlus Premium member, it's going to be free of admission, right? So this is just a preview on the broad spectrum that we'll be touching base on, right? And of course, that's about the so-called advertisements. Back to the man of the night, Gamuda. Of course, the disclaimer, do your due diligence. We might not be able to share enough materials just in a 1 hour span to help you make or judge an investment thesis or an investment idea. So if the company really excites you, do further studies before you actually initiate any positions in the company. So Chun Beng, tell us about the company Gamuda Berhad for those who might not have known the company.
Yeah, I think probably you guys will heard of this name, but you might not know what is the service that they cover. So the reason why we put these two image, because it represents what Gamuda did. Basically, is one side of it is property development. They build township and so on. Another part of it is basically they build infrastructure. So infrastructures, things like MRTs, they cover quite a bit of stuff. So later, the later slide will show what exactly they do and some of the key project they are able to deliver in the past 10 to 20 years. So maybe we can go to the next slide.
Okay.
So this is where they got started. Of course, it's a long history ever since 1976, but this is a few key things. So they got listed in Bursa back in 1992. And then after that, the key thing that they are able to deliver is actually all the highways. Beside Kota Kemenings, which is the township development. So it's all the highway that I will say, if you stay in Klang Valley, probably you will pay to them before. Also be Kesas, LDP, Sprints, Smart Tunnel, and so on. So these are some of the key things that they built in the time, earlier, like the 1990s times. So if you go to the next slide, then you'll be able to see what exactly Gamuda has been doing for the countries. So this is the three key things. If you really want to break down into the things that they do, so it's what I mentioned before: property development and infrastructures, and then they also do some engineering and construction work. So for the infrastructure itself, they also have the concession. So meaning, if you build the highways, then you have toll revenues and so on. So it's not just build and transfer. They also have some sort of recurring income due to all this infrastructure that they maintain, right?
Yep.
And then the
So
next.
Yep.
Japan can continue. Yep.
No. I was just saying that it's just not a pure play property development. This is also a company that has the skills, the knowledge, and the technicalities to make infrastructures and actually have the right to actually run the concession. So basically, they're going to be the toll collectors for some of the highways, right?
Yep. So this is the summary of what they have done before. So things like railway, airports, tunneling, which one of the biggest project they have delivered is actually the smart tunnel. Of course, you got highway, water treatment part, ports, and so on. This is the things that they have done. So they are not just property developer or highway developer. They are more than that. And then their service not only happening in Malaysia, they also have client in Australia, the Middle East, and so on. So they did quite a little bit of stuff. And then the next few slides actually give you the summary of what is the key highlight of the past 20 years. The star projects or the key projects. So you can go to the next slide. So I think this one, I would say, is one of the most popular or most famous thing they have delivered before is the smart tunnels. And if you guys don't know about it, smart tunnel is not just serving you as the highway. They actually have two purposes. So I think back in those days, KL always got flash flood. And then during those time, this smart tunnel will actually activate some sort of engines to actually cool out the excessive of waters to the nearby rivers. So it's quite impressive stuff that they are one of the top 10 world greatest tunnels. And of course, another one is the refurbishment plan that they have done and also deployed for MRT 1 and 2. And if you go to the next one, it actually tells you the things that they have done in the infrastructure sites, which is mainly the highways, MRTs, and on the right-hand side is the airport in Qatar. So, like what I mentioned, not only Malaysia, they also go beyond it. And then the next one is actually will be telling you what is the property developments that are able to deliver. Probably you might be okay. I think here don't have the example, but yes, basically sum up what they have done across how many acres. Some of the key name that is newer to you will be like Gamuda Cove, Gamuda Gardens and so on. So this is the newer township they are developing right now. And then the right hand side is actually telling you some of the key stats, how many motorcyclists daily. But of course, all these stats might not be true for 2020 or 2021 due to the fact that the city got locked down, and then they actually lost quite a bit of money or revenue due to that. And if you go to the next one, actually, is some of the things that they have done in details, but I won't go through. So this is the whole list that you can actually get from their website. So the key one or the star project that's happening now is actually MRTs. They are the one that they work with MMC to form a JV to actually deliver this. Of course, MRT 1 is delivered. MRT 2 is supposed to be mid of next year. But if you are staying around Klang Valley, you should be seeing a lot of construction going on. And of course, another few things is they actually managed to deploy the first digital IBS factories in Malaysia. And the rest is all the properties projects. I won't go through lah. So the two key one that's coming is actually Gamuda Cove and Gardens, the newer one. The rest is you might be hearing them before. And the next slide is more on the development or the project related to all the different infrastructure setup. For example, the water regulating dams, water treatment and power plants, and some of the public infrastructures. So, for example, this Pan Borneo Highway package and so on. These are some of the other things that they do. So, when you talk about Gamuda, don't just link them with just MRT. They are beyond that. So, and then what they have delivered is actually giving you quite a good qualities. That's why they are in the market for so long and still able to bid for big projects and won it. Okay. So this is some of the quarter by quarter numbers that you are able to see. So I put a remarks on the concession side because actually summary out what is the revenue they managed to collect from Kesas Highway, Sprint, and so on. They also got one thing is on the Gamuda Waters. They're also doing some sort of concession they are able to collect. But of course, going into Q2, I mean, it more reflected on Q3, 2020s. A lot of concession being impacted due to the lockdown and so on. But of course, you see Q4 then opening back up, and then people start to travel. So all this number is reflected. But their key issue is not actually about concession, about lockdown, but it's more of the demand of the properties. So they have a lot of unsold units, putting a lot of money to build up the township, but then they are having issues selling the unit out. The one that's saving them is all the big projects that's lining up, and then they have different billing cycles. Key one is actually MRTs. And also another one in the East Malaysia side, the Pan Borneo. And of course, you can see the number is not doing really well, but you'll be surprised their PE actually is quite high because people are still having some expectation on all the upcoming project that might be awarded to them.
Cool. So you can see that actually the company just reported their worst results in Q3 2020 lah. So of course, a lot of companies also face the same predicament as them, right? But at the end of it, I think safe to say right now we are quite near the end of the tunnel. There is the so-called light at the end of it, and that's where you see that things are slowly improving, even for a lagging segment like the construction and property development company. Right. But if you were to go into the historical income statement of Gamuda, right, I know 2020 was an one-off year when you cannot really penalize a company's performances based on that year alone. But if you stretch back, say, for example, back to 2012, right, you can see that, it has been growing 2012, 2013, but come 2014, 2015, and 2016, so those 3 years were actually the low period for Gamuda, right? So straight away, because of the so-called nature of the business, which is if you don't get land acres, you don't have property development pipeline, you don't have order books replenished fast enough, then you actually will see a company actually reporting lower revenue. And this is what actually has portrayed historically from Gamuda, right? So 2014 until 2016 was a little bit flat and no growth. But come 2017 all the way to 2019, the construction segment actually faced a little bit of impetus and also catalyst, right? 2020 it came down due to the pandemic, but you can also see that in the 2018 fiscal year, MRT2 actually came into the picture, and you can see that it has rebounded in terms of the growth. But then again, this is the kind of business where once you finish a project, you need to find another project to continue your growth story. If you cannot find a new project, then yeah, situations that happened to Gamuda like fiscal year 2014, 2015, 2016 are bound to happen. So it's going to be cyclical. The government will only sell out lands or give out, land acres, encourage property companies to develop when economic conditions are good, and also there must also be a supply and demand story. Of course, these property companies can develop, can build new projects, but there must be a public out there that has the money, that has access to financial capabilities to buy new houses and etc. So all of this interlink quite heavily with the economic condition, not only just Malaysia, but also around the world, since Gamuda has projects not just in Malaysia, but also around the world as well. So you have to take note what is the current economic cycle we are in. Will Gamuda actually benefit from a more bullish economic sentiment? So these are the questions you need to ask yourselves, right? And if you look at the so-called balance sheet of the company, of course, the total assets portion is growing rather slowly. It is still growing to a certain extent, but it is, I would say, an elephant, right? So this is a company that cannot grow fast. It requires a lot of capital, a lot of money to actually grow and build projects, right? And slowly recognizes whenever their projects get sold and when they finish a township. So it's going to be a long, tedious process. You're not going to complete a township just within 1 year. It usually takes more than that. And to actually sell out, to complete the township, is not just a 1 year game plan. And not only that, you also have to think after finishing one project and one township, what is the next plan? What is the next story, so that you can bring more catalysts to the table and encourage investors to actually invest in your company, right? So these are the key, I would say, thoughts that you might put into before you actually invest into a property or an infrastructure company like Gamuda, right? One good thing about Gamuda is that I think the cash portion of it has stayed relatively healthy. So that this company actually, even though from the numbers itself got impacted, but they never really went into a, I would say, cash squeeze. They had to refinance, they had to undergo rights issue, etc. These kind of corporate exercises to actually stay afloat during tough times. You know that during the peak of the lockdown, there were no construction. There were literally nothing. The business was actually quite hit badly. But the company actually managed to just pull down their expenses and conserve more cash, and they actually wrote off the entire pandemic. So I think they have to give them cookies and also credits for actually passing through the tough period, as not all companies actually managed to survive the COVID pandemic, right? So you can see that this company will rely on debt itself to actually keep the business moving. So you can see that in 2019, they actually managed to retire the debt that they issued back then, but come in 2020, they also will have to issue new debt. So this debt will actually be part of the working capital to ensure that salaries get paid out, projects, deliverables to certain suppliers, etc., gets paid on time. So because it will always take time for a property development company to sell out a property, right? So it doesn't sell out the entire condo just within a day. It's going to be a month or even almost a year kind of exercise, right? So this is where the debt comes to play in helping the company run the business and runs its operations lah. Putting that aside, the company does earn money. It's profitable, even though fiscal year 2020 wasn't a good year, but overall, it didn't slump into a loss lah, right? And the company still managed to actually pay out, I would say, normal levels of dividend. You wouldn't expect them to actually pay out very, very generous amount, but this is just like a small reward for those who have actually invested with Gamuda. So the amount isn't much, and nor is it growing. So you would probably find more acquisition by buying the company at a lower price due to the sentiments and riding on to the bullish sentiments and see the capital appreciation. But of course, as we said, this is a cyclical company. We will also look into the share price later to see how cyclical they are. But before that, what are the prospects, Jermaine, for those who are actually saying that, okay lah, I think price is low enough to bet on it as a recovery. So what are the theses that can come into play that can see Gamuda share price going up higher?
If you guys are following the news, I think early of this week, Monday or the day before, there was a news, I think, released by the transport ministers, Dato B, saying MRT discussion is going on again, but of course it's not finalized yet. And then based on the experience that Gamuda has for MRT 1 and 2, they will be the one that's having a very high chance of winning it lah. But just bear in mind what actually happened to MRT 2 specifically is when the Pakatan Harapan take over the governments, actually it put an on hold to this project and eventually resume after the contract got renegotiated. And it's actually reflected in their P&L, impact the profit margins. So with these as a precedent events, it's hard for them to actually push up the margin they're able to get during the MRT 1's eras, right? So it will just be another big project coming in, a lot of revenue, profit margins might not be true. The second one is actually coming up is HSR, but if you are following them, they have been putting this thing in as the prospect of the growth story. I think since 2018, in their annual reports, they've been telling this will become in talks, advance the talks and so on. But of course, this got a lot of political influence that you can't really predict. But of course, again, they are the one that is having higher chance if they to be awarded due to all the experience that they have. And then, but of course, whether this one will be lower down of the potential because it's stopped at JB or whatnot, we don't know. But the whole renegotiation might happen and then go back to Singapore again, but we don't know. All this is still very something not concrete. But one thing that is quite promising is actually they are having a lot of, or we call it a strong pipeline in Australia. This is the part that I won't go into details because you guys might not heard of the exact area in Sydney and so on, right? But they are actually being shortlisted in some of the projects in Australia for the metro railway lines. And then beside that, they also have some of the projects, the JV with some of the company in Australia, trying to support the Sydney metro projects. So there are a few things going on in Australia, especially in Sydney side. So the management is having a very optimistic view on it, but of course, whether reflected or not, we shall see. But this is all the prospect that's coming in for Gamuda Berhad.
Okay, got at least a little bit of bullish thesis to actually see the share price going higher. But what about the risk of the downside, right?
Yep.
Chun Beng?
So there's two parts. So I think the biggest one that might hit them is actually the property demand and supplies, because it's really a bad years for 2020s. Even though the recovery is coming, but people might be more cautious when they need to spend the money. And of course, the property that developed by Gamuda is not those low cost centric kind of properties. It's not like Syntax. They specialize in low cost or affordable housings. So for them to be able to catch up with the property sales, it might take a little bit longer time. But of course, the share price is okay due to a lot of big projects seems to be coming in, MRT3s and so on. But another key things that is already happened to them before is all the political influences, right? Changes of government did hit them quite badly, and Malaysia, I think right now is still not really stable. There's still a lot of things might happen in the next general election. We don't know, but they are the one that rely a lot on the mega projects from the governments. Any changes of those will impact their PML quite badly. So
Yep.
of course they start to, I mean, not start, they have been doing a lot of projects outside of Malaysia. That's why I think the Australia one is really a good one. They keep the pipeline healthy, but beyond that, those things that's in Malaysia is a bit not so predictable anymore.
Yeah, true. I think judging on the downside, apart from the business model, which is quite heavy asset intensive, right? So just really doesn't make it for me as an investing game plan or investing, investing kind of component inside my portfolio lah. So looking at the valuation, right, you can see that the company is not cheap, right? Surprisingly, for a property development company, trading at 35 times PE. ROE is just like 2.94%, and profit margin, as you can see, is around 8%. That's less than 10 currently, right? And of course, the company still managed to pay out 12 cents dividends, and if you just divide it by today's closing price, you get 3 point something percent dividend yield. And there you have it lah, the price to book ratio. So surprisingly, this was, I think, like the share price went out quite a bit lah. So that's why you can see right now it's trading at a higher price to book ratio, which is 1.04 times. Usually, most of the time, less than 1. A lot of other peers are actually trading less than 1, right? So you have to really work your mind around it, whether is this the kind of valuation you want to pay for infrastructure come property development come construction company, right? So they are definitely one of the strongest guys out there. And of course, if you're someone who is passionate wants to find a construction company as a component inside your portfolio, they are one of the better guys lah. But there are also quite a handful of them out there. They are also quite good as well for you to study, and hopefully by studying all the good ones, you manage to pick out the better ones, or maybe the best one for you to add into your portfolio if you want to lah. But Chun Beng, any chance of you actually adding a construction company, or do you have a construction company right now inside your portfolio?
Right now, no, but I would say it's really banging on the recovery concept kind of stocks. Yep. And for me, the short term, it won't really reflect the value. So maybe people start to coming into recovery stocks, and then the next quarter result, it didn't reflect it, and people pull out. So I think this will happen. So it's good for short term gains, but you need to know when to sell. Because the next quarter result definitely won't be the one that reflecting the short term boost, in my opinions. So, but of course, Gamuda is slightly different. They do more than that. MRTs and HSR, if it ever comes, I think this will let them stand out if compared to the remaining property developers.
Yep. Cool. I think right now we will be going into the share price movement of the company, right? So you see, I think this is the valuation. So yeah, basically if you just omit PE ratio, which is quite if you just basically look at the VP ratio, it's not going to be a valuation that you're going to buy the company at. Even at price to cash flow, not also quite convincing as well, right? So basically, maybe this is one of the companies, right? People tend to say that value investing doesn't work. But I would say that you have to really look at it from another angle. You need to really know what are the order books of the company, what are the so-called upcoming prospects or projects that can actually the company really has the technicalities and more highly chances to actually secure the projects and will actually make an impact or make a positive contribution to the overall company performances. Meaning to say you use your anticipation and also a little bit of analytical skills to actually put a well adjusted bet onto it, right? Don't go all in lump sum, but actually if you're very confident but you still want to actually ride on the potential growth, yeah, by all means do your risk analysis well and do your calculated simulations well as well. So but based on valuations, just a little bit too far-fetched from the numbers itself, but it's still a good company that has actually rode over the so-called pandemic, right? So you can see here right after 2018, company previously was around 5 ringgit, came all the way down because we had a change in government. The market doesn't like the ambiguity of a new government. And then, yeah, it got really hit hard in terms of the share price, down to the bottom of 2 ringgit 50 cents. And then it has been hovering, I would say sideways, put it this way, from 2019 bottom all the way to 3 ringgit 58 as of today. It has just gone up 1 ringgit, so it's around roughly 1 ringgit extra on top of 250. So not too great, but also very ambiguous going forward as well. There are a lot of recovering expectations for this stock, but there are also big drawbacks, noting at the risk that the company has, right, in terms of the geopolitical tensions and geopolitical uncertainties. Right. So quite a straightforward company. For me, if you want to bet on the recovery, make sure you just really do sufficient homework. And of course, wish you all the best in finding a good construction company if this is really your cup of tea. Right. So we will head to the comments and also the questions to see are there any tough questions waiting for us today.
So I think so far there isn't any question on Gamuda, but there's a question talking about today's hot topic, which is the merger of Celcom and DG. And then there's asking what would happen usually when two listed company merge. So I think maybe Japan, you want to take a step first.
Maybe you take a step first, since you previously handled something related to the telco industries. Maybe it will be good to hear from you first.
Yeah, I think if you are familiar with Malaysia, you usually talk about Maxis, DG, Celcom. So when this happened, who will be the one benefited? Maybe I would say JuJuR Mobile. Because out of nowhere they become the top 3 due to this merger, right? But then I think the merger of these two companies come with a lot of strategic view. Malaysia, when you go to 5G or bidding of certain how to say the spectrums, it actually needed to bid for it, and then Malaysia actually give priorities to local companies. So the spectrum typically they will give to, for example, Celcom, because they are technically local owned, but DG is not, because behind them is Telenor. Norway-based telcos. So the merger of these will make sure DG doesn't really lose out, right? And then together with this, the good coverage of Celcom network will be able to cover what DG is able to deliver. So all these things I think is good from the two company perspective. But of course, what will happen when two listed company merge? Of course, you see that today they actually pull them down. They cannot do any trading on these two stocks because you need to go through DUD and then need to go through a couple of things so that the share price can be truly reflect after the merger. But what is the exact process? I'm not really sure. Maybe Jupan, you can do a quick sharing. For me, I'm not really sure about that.
I think firstly, of course, they will need to go through a thorough process. They need to calculate how much one party is going to acquire the other party, right? So they involves a lot of lengthy process and a lot of maths, right? That we at the point of time right now we wouldn't know. But if we just talk about what would happen to DG and Celcom and the entire Malaysia telco condition is that now that you have two companies merged into one, automatically you can see it straightforward is that there's one less competitor, right? In terms of the bidding, as Jumbeng said just now on the spectrum wise, now there is one less party. DG and Celcom or Axiata are going to combine and bid for spectrums in the future. So in a way, one less competitor to worry about. I think you can see as both ways right now. So combined entity means that there will be some cost optimization that the Celcom and DG merger company will actually will look into, meaning to say that previously it was two company, you have two managing directors, you have two of everything because each of the company have their respective management team. Now when you combine everything together, you don't need that much people looking at a company, right? So you can do a little bit of cost cutting here and there, which means to say that there will be a little bit of retrenchment or reorganization, stuff like that. But short-term period would be painful for both companies. It will also be a time where on a book or on account side, you have to recognize impairments, you have to do write-downs, etc. All these kind of things. But long-term wise could be a good kind of way forward for all companies, especially for both Axiata and also DG, because there is limited market share. Basically, to say that now almost all of us already have a SIM card, already have a mobile plan. It's going to be difficult for the entire telco industry to grow at very good growing rates because practically who can buy a mobile plan or has already bought one, and usually we do not hold 3 to 4 or 5 SIM plans, right? So at most maybe 2 or 3, depending on one for work related stuff and one for personal stuff, but it rarely goes to that kind of level where a single person will actually have to buy and subscribe so much mobile plans. So I would say it would be less intense in terms of competition, but the long-term prospects for Malaysia telco, I'm still rather neutral. So you wouldn't see fantastic growth, just that now it's just less stressful by having to face a combined entity rather than face separate entities of Axiata and also DG. So hopefully that answers your question. And of course, it will also really depends on as the so-called details unfold, how the market will react on the available news that will be published. Okay, so of course, hopefully for those who are invested in DG and Axiata, things turn out well tomorrow. That you will not get the heart attack, and of course, maybe we also answered why construction companies tend to be a little bit more slow in terms of growth because of the entire sales cycle, the entire development process, and also the time you need to actually complete the project and sell off the project. All of it need time. And during the time where they cannot replenish their order book, of course, it will actually put the growth into a halt lah. So the company will not exhibit a continuous kind of growth lah. So do take that into consideration whenever you want to invest in heavy industry like property, infrastructure, and also construction company, right? All of these are cyclical. And do your due diligence. And if there isn't any other questions, we would actually take our break here. Of course, if you have any other companies that you want us to look deep into, you can leave it in the comment section, or you can actually email us, or do whatever kind of contacting measures to us. Let us know what company you want to know or feature in the next week's Also Let show. And if that's all the questions you have, I wish you all a very good evening and a happy weekend up ahead. So see you next week. Bye bye.